tax day. It is April 18th, and that's a little less than a month away. But if you don't think you're going to make the date and you may need an extension, don't miss this.
An extension is an extension to file your taxes, not to pay your taxes. And so it's really interesting, really, to fill out an extension, you really have to know what you're going to owe, what your taxes are going to be. Because you still have to pay that amount.
And if you owe your taxes, well, you know what? You have two options. You either pay in full right then and there, or you set up a payment plan with the IRS. You can pay by direct deposit from your bank account. You can do it online. You can even do it by credit card. But all of the options mean you'll pay interest if you're doing a payment plan. Okay, extensions, just one of the possible pitfalls when filing taxes. So we've got Ryan Dodson with Liberty Tax Services and J.W. Degance with Jackson Hewitt with us today, answering all of your tax questions. All right, so let's just kind of get a handle what tax season looks like this year. Ryan, are people kind of like keeping up to speed, or are they kind of falling by the wayside?
So far, Tanya, they're running in just like normal. So, this time of year, we get folks who want to file, and they're like, hey, look, I do need to file. But as we get closer to the deadline, we get more people who come in because, one of my old bosses used to tell me, what's the purpose of a deadline if you're not going to use it? So we'll see a lot more folks as we get closer to April 18th this year.
All right, JW, when people wait, what is the kind of stress that it puts on them and maybe tax preparers as well?
There's a lot of stress involved in that. It's just the unknown. This year, there are a lot of variables. We're seeing refunds, or we're seeing refund shock. And so the more people wait, they may be surprised at the end if their refund has lowered or how much more they owe this year. So it can be a stressful time. So it's important to go ahead, get started now. Don't wait, don't delay. Get all your paperwork together and get it completed.
All right, well, let's talk about that, about why your refund may be a little bit smaller this year. There are a couple of things that are in play with refunds this year. So we're going to put up a graphic for you so you can kind of get an idea. So the first thing is the tax credit. So let's talk about that difference.
Yeah, sure. The child tax credit last year was $3,600 for those that had kids under 5 and was $3,000 for everyone else. Now, some folks received that during the year and the others received the whole amount. But, this year, the COVID stimulus laws went away and we went back down to the normal $2,000 child tax credit.
All right, plus the dependent care percentage is lower. And then there was that last year, everyone got to take a charitable giving deduction, even if you took your standard deduction. That does not exist this year, does it, JW?
Correct. There's not that no above the line deduction for charitable donations. That's absolutely correct.
All right, so that means that, again, that could make your refund a little bit slower there. What is one of the biggest mistakes that people make when they're doing their taxes? And I'm sure there are plenty. So Ryan, we'll start with you. JW, I'm sure you got one too.
Number one, they don't remember all of their documents. They file a tax return and it's incomplete at the end of the day. And whether that is they forgot a job that they may only worked at for a couple months at the beginning of the previous year. I mean, we're well more than a year removed from that. Or let's say they may have received a little bit of unemployment, or like right now, let's say they traded in cryptocurrency and they forgot to report that transaction. That's probably one of the biggest things we see right now.
Okay, how about you, JW?
I'd say that it's also the information that they don't always take advantage of all the credits that they are actually eligible for. 1 out of 5 individuals don't actually get the EITC that they qualify for. And that's just one example of credits that they just may be missing out because they're unaware or don't understand when they're trying to complete their tax return.
Okay, gotcha. All right, so I want to make sure that everybody knows while I'm asking the questions right now, we really are here so that you can ask your tax-related questions. You see the number that's there in the corner of your screen, that's 336-379-5775. You text us in your question, and it's anonymous. No one knows who actually asked the question, but you get your question answered right at that moment as you are texting in. For instance, this person says, my wife and I were gifted land 25 years ago from my parents. I have now sold it. What do I use as the value for tax purposes? Ryan?
Oh, wow. So it's going to take a little bit of research. And so the value of that land is the value of it when you received it 25 years ago. And so if you do not have an appraisal from back 25 years ago, I kind of use as the old standard is that, go look at the tax appraisals. from way back then. It's probably not the actual number you really want, but it does provide a little bit of, some basis and support for claiming how much basis to claim on that sell when you do end up selling it. So
okay, so you do have to look at some paperwork to actually fill that out.
yes.
Okay, all right. You can't just like estimate it off the top of your head and hope that you're right. All right, this person says, JW, I work in Virginia, but I live in North Carolina. Do I file in Virginia or do I file in North Carolina?
Great question. Well, you actually have to file in both, because you live in one state, but then you earn income in another. The good thing is that North Carolina and Virginia, they do reciprocity, so they work together. So usually what happens is it offsets. Maybe one you may owe, and then another you're getting a refund, or vice versa.
Okay, and what happens if you've moved here? How do you know when you should be filing in North Carolina or the state that you moved from?
That's a great question. So what you'll have to do is when you're completing your tax return, it's going to ask you if you moved, or your tax person is going to ask you when you moved. And it's important about that date, because that date is really going to help determine, how long you're a resident of the new state you were living in versus the old state.
Okay. All right, this next question, this leads us down another different kind of rabbit hole about age and taxes. But this person's asking, if you're 65, about to be 66, and you own your own home, do you still have to file taxes?
Yes, you do, Tanya. It all depends at the end of the day of how much income you earn and what type of income it is. And so we get a lot of questions, like some folks are like, hey, look, I turned 65. I don't have to file taxes anymore. Well, maybe. Look, my grandfather lived until he was 96. He filed taxes every single year until he died. So a lot of folks may just receive Social Security, and if that is all they receive and there's no other income whatsoever, then they don't have to file, and they're not required to file income taxes. But there's a crazy little formula the IRS does. It takes half of your Social Security and your other income. If it totals up to more than, say, $30,000, then yes, some of that Social Security is going to become taxable. Now, whether that requires you to file, whether you're over the standard deduction, that's really going to depend upon your specific tax situation.
All right, but
so
to make it very clear, you don't age out of taxes. That does not happen. You age into taxes, right? But you don't age out of taxes. All right. We're going to take a quick break. Remember, you can text in your question and we'll be right back.